The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. The heat is on. We're going to take a look at the XLE. We're going to kind of do this relationship with crude oil here. I want to show you guys, talked yesterday on Tom's show yesterday afternoon. Wednesday afternoon, I'm there every Wednesday afternoon. We're looking at the 5413, the XLE unfurloughed, and what does that do? That corresponds directly, which is really, really cool, with the crude oil situation on the March contract chart. So let's take a look at the daily here. And as we look at crude oil, we took a look at this 29.26. We talked, and if you watch this show, again, not trying to pat ourselves on the back here, but it's about continuing to turn the wrench the same way and just stay with a trading plan. And if you're using some other things that Basil puts out, Steve Rhodes, Tom O'Brien, David White, Larry Pesavento, it's great to look at all these things in conjunction with each other and really try to make slow your trading down, we say this all the time, try to wait for, as Larry would also put in there, the stars to line up a little bit. But this 29.26 was kind of the next leg down to take a shot and try some things with crude oil after we had broken. Got to close above this 32.73. Talked about kind of getting into this trade a little bit early as it was compressing up. But again, I was hoping the consolidation would happen here. It didn't happen. Had to take the medicine. Try it again. Had a nice little bounce here yesterday. But again, we're in the middle of the fair auction. Don't get too mega excited about crude oil just continuing to go up. In my opinion, it actually should have gone up farther based on the dollar completely getting decimated. And we're going to hit this really quick, but if you'll kind of go back and look at that XLE that we talked about, I'm going to pull it up in the scanner really quick. I'm going to go to our ETF section. And by the way, on the close, we're going to get into this. I mean, my God, we had every ETF sector just went completely breath positive on the short term. And I'm not talking about a small breath positive. I'm talking about a pretty large move here. Here's the daily. Again, you got the XLU just leading the way. And by the way, guess what was second in line on our short-term 60-minute breath when we had materials were first on the massive snap up move here on the end of the day. But the XLU, again, second in line, again, proving that relative strength situation is just a night. And by the way, go back to the daily, and hey, guess who's leading the pack? So on all time frames, XLE is still looking very good. Is it time to take the trade off? We're going to take a look at that today. But going back to the XLE, and I'm going to go back to. Excuse me, I felt like I had a bug in my ear. Shouldn't have said that. Here we go. XLE. Here's your inflection points that we just, seriously paid attention to, that 5413. Here's the landscape view. That's kind of where we came off of. And I'd like to see this thing close above, and I'd like to see crude oil obviously continue to head higher. But remember, I mean, the relative strength trade is to probably pick out some of these XLE stocks and just hang in there with them. That have, we talked about the gang of five the other day on the XLE stocks. I mean, again, just try to make it boring. Try to find things that are just going to be not that painful if you're wrong. If the market doesn't cooperate, or if the commodity doesn't cooperate in this case, then do it. So going back to the dollar situation, this is pretty ugly. 98.40 combined with that 98.30. We talked about that was the support area for this thing, and when it went through that area, the whoosh sound happened. But I want to show you something. Here's the daily, and here's that 98.30, that unfair high combined with the weekly unfair low, and that was, again, you look back at this, that was to be used as support, and we just I don't want to just kind of give you a rewind on what happened, but let's try to figure out what's going to happen moving forward. So we got down here on the daily yesterday. We closed actually also below our daily profiles. Then we went back and retested this morning. That's ugly. So a lot of these commodities are forced to reprice themselves right now to a cheaper dollar, crappier dollars. Let's reprice ourselves higher by default. So what I was saying about crude oil is it literally should be a lot higher just based on this default type move. Keep that in mind. Don't get carried away that crude oil is going to go back to $40 really quick, in my opinion. I mean, I'm just saying, gather yourself. And as we look at the dollar, what do you do with this thing now? So, we don't have any new hints, any new profiles attempting to appear down here. We have played around with doing a breadth calculation on the U.S. dollar, even throwing some, off the wall currencies pairs that are related to the dollar in there, and then kind of getting an aggregated, hey, what's the real internals of the dollar plus some extra things that are going on to create a breadth. If you guys would like for us to explore that, we kind of dropped it because we had so many other things to clean up. To try to speed this product up. We just kind of dropped it for a while, but if you guys are interested in that, just send an email in. And any other ideas that you have, we have, we get requests in all the time to add instruments, and we add them, and I don't broadcast that. These are kind of private requests, but we try to accommodate everybody. And any ideas or concepts, the cool thing is we're in complete full control of this thing, I think. And I mean, this is kind of built, believe it or not, around user response. So, we really love to hear some of these comments and ideas come in because we're like, wow, everybody could use that, or, so don't be bashful, put it that way. So going into our futures complex here, we're going to notice just in general, if you look at some of these hard commodities, you've had some green shoots and some things change tone over here on the short-term time frames, and that's that kind of repricing effect to the dollar. Even had beans. I mean, let's go into the bane of my existence, soybeans. I'm just kidding. I'm actually going down to see the boys today at the elevator. I'm sorry, that's silver. Wait a minute. Okay, here we go. Here's March beans. I expected a little bit better reaction out of this. Beans actually sold off on the 884, again, proving that what we talked about the other day with beans, that there's really hardly any news events that's going to rattle this thing right now. So we're in a range-bound situation. We're going to finish up with that and hit some stocks when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as the dollar has repriced quite a few commodities in general, we're going to take a look at gold. And Tom has been just stellar on talking about this going straight up. We talked yesterday and the day before, we've got to see this thing to even think about, and this is not even going to apply now, but because we're so far above this. But until I've not been the most bullish person in the world on gold. 1124, 1125, we talked about we had to get back down below there a couple of days ago to really think about shorting this, and that's just not happening. So again, kudos to the guys out there who've been getting long this. I mean, and that, to some degree was a predicate of, the dollar was a predicate of this. And if you guys had been kind of heavy on the dollar, then, all this kind of works together. I, of course, have been supportive on the dollar and relatively bearish on oil, what are we talking about? Gold? On gold. But alternatively, relatively bullish on crude oil. And, again, the concept I'm kind of heading towards here is don't put all your eggs in one basket. You got to just kind of have these odds out there in multiple places. When you're doing statistical analysis, you want the sample set to be relatively large, because if it's small, then your theory and your plan that you're using to collect the data and the whatever the data points are going to say it's not going to be valid, because it's just a statistical fact. I'm kind of stuttering now, but yeah, I think you get my picture. So as you look at some of these commodity stocks, ETFs, indices, try to trade lighter, in my opinion, and try to spread the risk out. And if you look at any portfolio manager who's ever been successful, he's not only going long or short crude oil. They are spreading the risk out, keeping the powder dry. I want you to kind of think like that, because that's how you're going to really kind of move forward with this. If you go in there with the idea that, oh my God, I can sit in front of a screen and see the lights flashing and roll the dice every day, you will not be doing this for a long time. So Larry will just tell you this implicitly. Who's up next? So, all right, gold futures. So what do you do with it now? Here's our 240. Again, don't see. I mean, I'm going to show this on the scanner, and we're up again this morning. I'm going to go back to gold. There it is. Green across the board and no hints of any new profiles attempting to appear. So if you're thinking about shorting this, you're just pissing in the wind. If you're long, there's no reasons to take this off yet. I mean, just like the XLU, I mean, I'm going to go back to that for 2 seconds here in our E-signal charts. I feel like I'm supposed to be going in our E-signal charts. Let's go to the XLU. All right, nobody is responding to anything in the den. That's interesting. I'm glad I'm so full of information and entertaining today. XLU, that's where we closed yesterday, and we've talked about, you know, letting the fine wine breathe and just allowing, you know, a sign or a signal to come around that's going to allow you to think of that, okay, we've reached our targets. Hasn't happened. And at the same time, that hasn't happened on gold. So as we look at some of these products and we're trying to figure out, and you know, Tucker at one point had asked, you know, he said, you know, I have a trouble kind of letting these things run. It's very difficult to, you know, some people, if they see profits, they just want to take it, you know. Some of these things really, you can make your whole year sometimes in allowing, I mean, just take your hands and sit on them or walk away and put a stop in relative to some of these profiles that are either guiding it up or just, you know, wait until you get a sign. I've made the most money in my life getting away from the screen and not looking at it, you know, and just putting the order in and, you know, letting the thing do what it's supposed to do. So just keep that in mind. All right. Treasuries, something that's completely, you know, just astonished me. And as we look at treasuries, we're going to look at our daily. And again, you know, we're trying to look at different things around the globe and commodities and relative situations that are hopefully going to kind of fit together so you can get an idea of either how to trade the S&Ps or how to trade the gold or how to trade your favorite ETF or those internals of the ETF. So as we look at the 10-year, you know, yesterday, Tom and I talked about, you know, like, let's just wait until we see some signs here. We had a little bit of a reversal action yesterday, but, you know, I wasn't completely convinced, nor was Tom, that this thing might be over. And I'm going to go down to our 10-year. And as you can see, a little hint of a new profile attempting to appear there. But again, I'm going to show you what that means. That's not showing up in our charts yet. And that's not a shorting situation yet. That's kind of more of a target-rich environment. And the cool thing is, as I look at our daily, this is not showing up in our e-signal charting package yet. It's going to show up in the scanner first. It's a little bit different algorithm. That means that we've got a profile really, really attempting to appear there. So see that yellow right there that just popped in? I don't know if you guys are seeing my charts right now, but the scanner always catches these things first, and that's a sign that we may have a new profile attempting to appear. But I'll be honest with you, I'd really like to see this thing completely break down below 129.21 to even think about retracing back into that, you know, high 128 area. So again, have our first sign right now that we may have reached some targets, but again, that's not exactly a shorting sign. It's kind of a long target sign. Just want to make sure, are we on the right microphone? Because I've had some problems, Al. Just want to make sure I'm using the microphone on the headset rather than the laptop. Okay, cool. Sounds great as usual. Great. All right, so Shanghai. All right. We've talked about this, and the U.S. stock market is going to be, you know, looking towards this, you know, gorilla in the corner here. What we're doing really is retracing. Okay, we got into this hole in the marketplace, and the hole in the marketplace being that area between 2371 in 28.13. Now we're kind of retracing back up into the top of that hole. And remember, when we have a hole in the marketplace, this is what this means from the past. Market participants didn't give a crap about that area, all right? And that's a blunt, layman's terms way to put it. But you got to keep in mind those. It's almost like those island reversal, like when you have these gaps. I mean, a lot of times they're revisited. This is kind of that same concept here, but we're kind of in that hole. We kind of went back and retraced to the top of the hole. We're going to talk about this a little bit more, and also relative to the next time frame down. We basically just retraced back up into the intermediate resistance. So, in my opinion, we're still going to head lower into Shanghai. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show, and I think we're completely honored. I think we have Tom O'Brien with us. Tom, are you there?
What's happening, brother? How you doing,
Hey, man. Good. Doing good. How are you?
Hey, I'm doing great, man. Thanks so much for taking the call. Hey, listen, the 10-year that you were just talking about, right? When a new profile sets up, like on, I saw that little yellow coming on your scanner, right?
Kind of flashing. Yeah.
The flashing, right? Okay.
Mm-hmm.
Does that mean that? What does that exactly mean? Does that mean that there's going to be new support coming in? Does that mean it's going to a target? What does that mean?
Well, really it means that we're going to have a new balanced area or new fair auction that could lock in by tomorrow morning. I mean, and that's why, a lot of, like on Bloomberg, Tom, and I know you got a Bloomberg terminal, you can actually access for free actually on that terminal, we call them dynamic VAPs and dynamic taps on there. What they do on Bloomberg is they don't really flash yellow. They just kind of have a profile that appears and then disappears and moves around. And that's the way they wanted it. But I think it's better for the folks out there in the scanner because, what happens here is it just gives a hint that there's the thought of in this case, a new supply area, which is overhanging supply and new inflection points to really lean on. And possibly, that may be a profile that ultimately may be broken down technically on. So it's just an indication that we've got a new trading range at bare minimum that will be appearing. And it
that's
not
pretty cool,
not will.
Man, because, that's why I wanted to ask because so what you're specifically saying is that we don't know yet that trading range that could be a high or that could be major support too, right? Is that what happens by the time? Yeah, exactly. Okay, cool. Okay.
Correct. And that's exactly the way you should look at it. Now, see, it's kind of flashing yellow here, but that's just an indication. It's saying, hey, we may have some headwinds, not headwinds, but just a target-rich type situation for the interim. The long.
No, I like it. Yeah. I get it. I get it.
Cool.
That's what
Cool. Hey, can we talk about GoPro?
GoPro, GPRO. What's a GPRO?
Yeah, I mean, when this thing came out, they had it all hyped up on CNBC. That's why you don't want to really get glued into watching CNBC. They have the guy with the nice hair and he's talking how great this thing is. But I'm just sitting there thinking, okay, he's created a unique product called a camera, and they've attached a stick to it. How much value over time and how quickly are people going to replicate that thing? Is this thing going to zero?
It's last month. Okay, so it was the high is $98.
Yeah.
And last month it hit $990 with volume, and so it's going to break that this morning.
Yeah.
If you get volume on it, guess what? It's amazing about this GoPro thing too. So check this out, just on a fundamental basis. So when the guy came out with it, I was like, okay, man, this is a really cool camera, no doubt, because the marketing was great. But then when I saw that he got away with selling billions of dollars of stock, and it wasn't locked up, I said, what a scam this is, right?
Yeah.
And then I decided, hey, man, I'm going to go buy one of these, right? And I sent someone down to the store. It was like $500. I said, no, I'm not spending $500. It's like insane. It's like, okay, forget it. And I can imagine just a lot of people did that because, I figured a couple $100 or something. You can get a gorgeous camera for a couple $100 now. Just our phones are great cameras. But I am not spending that kind of money. It's not even close. And,
if you do the numbers on this thing, and I don't really sit back and do the kind of the accounting numbers on these types of things very often, but this one I actually looked into. This thing really is. I don't know. Zero's possibly in the cards on this one. Honestly, it's a bad situation.
And I guess anyone could really replicate quite a bit of it. Well, my understanding is too that he doesn't have a lot of patents. Most of the time when these tech companies get taken over, they get a lot of patents. I think he has 11 patents. So that's not a lot. That's not a big number at all, man. You know what I mean? So.
Well, there's not a lot of trade secrets that somebody couldn't kind of go around those patents with on this type of scene. It's not, again, he didn't invent the Polaroid camera, if you know what I mean.
Exactly. And look what happened to Polaroid, and they did, and Kodak.
Exactly.
Yeah.
Well, hey, what else is on your mind this morning? Anything?
I like how this thing because I like how this E-mini's trading right now, actually.
Oof.
And what I mean by that, folks, specifically, is that when you have a day like yesterday, it came all the way back, and all they're doing right now, so check this out, we're pulling into the bar at 14:20 hours, 2:20 yesterday, And that bar, that's when the S&P went up 15 points, folks. Yeah. And that bar has 115,000 contracts. That's a normal move, you know.
Yeah.
So it's just more deviant than, you know, my take is that we're still going higher, man. I mean, this is a great market for traders. It's not a great market for, you know, for people that are invested, no doubt. They got to be having conniptions, man. They just turn off the radio, turn off the TV. Don't turn us off, though, folks.
Yeah, I'm showing.
I would know, you know.
Yeah, I'm showing those S&Ps right now in the daily, and you know, we kind of this morning just got into that, you know, area, that neighborhood around 1918. We kind of backed off from there. I'm kind of with you though. I like the higher lows that are kind of happening here, and I like how it's kind of compressing around the top of this profile, even though we kind of let me down the other day when we didn't stay above this 1918 general area. I hear you though. I like the way this thing's kind of looking like it could pop again. What are your thoughts on the dollar relative to this market? I mean, is there any, in your opinion, you know, benefit globally, the multinationals, and you know, in the indices in the U.S. and how this may affect just. Good.
Yeah, this is pretty wild, man. I was thinking about this morning. So picture, you know, my take is that the dollar, you know, does want to get down into this 93, 83 area. And then if you look at it on a continuous contract for a long period of time, it's like, man, hold it. If you break this area here of like 93.15, you know, this thing is down into 88 in a second. Yeah. So then I said, oh, man, you know, I remember when the market didn't like a strong dollar, and then that would equal, you know, not a strong dollar could equal higher asset prices, right? Period, including the market. Right. And so that's in conflict with my larger view that the market's going down. So it's like, oh man, okay. So is this thing going to play out that the market takes a hit from now until October, dollar keeps continuing down, and then all of a sudden the dollar really falls apart, and that brings the market back after October?
It's amazing what they like one month and then they don't like the next month, you know.
No, totally. And if that's the case, though, it's going to be a freaking field day, man. Because it's you know, you can move from you know indices to commodities to the currencies. You know what I'm saying? That's pretty wild, man.
Without question. Hey, man, thanks for calling in.
Absolutely, man. Have a great one, John. Great show.
Okay,
bye.
thanks, Tom. Okay, bye.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Thanks, Tom, for calling in. That was a great discussion on the dollar and how these things unwind over time when it comes to kind of a sea change event. We got some technical damage on the dollar right now, and I'm stopped out of that one on the buy support dollar till the cows come home concept. That's kind of over. We were looking at the Shanghai before Tom rudely interrupted us. I'm just kidding. That was awesome that he called in. We talked about that hole in the marketplace. I just want to let you know we're getting into the kind of the turn the rents the same way situation, which is lining up on the daily and that kind of top of the hole in the marketplace historically on the Shanghai. We're showing e-signal charts to show this. And it was great that a question was asked about that kind of yellow bar attempt, that kind of flashing situation on the charts as it relates to the scanner and what that actually means. Going back to gold, man. I mean, wow, just had a launch happen here. And this is what's really sad. What's really sad is that there's a bunch of people, when I say people, larger fund managers out there and hedge funds that are like, oh God, gold's going to 1,000. And they've been legging into these shorts, and they're having to cover more than likely. All right. Now, if you use these profiles and you listen to some of the folks on TFNN and you kind of consolidate that information, hopefully you won't get in these situations. And then, wrong side of the trade, blah, blah, blah. You want to kind of look at these areas with predefined plans and predefined inflection points to deal with something like this. Now, you've been watching this show, I hope, and I've been passing on the long up, but haven't really found a reason to short this yet. We've been talking, maybe we can try something below 11.24.25. That'll be trading against the long-term trend up now with the close above this weekly situation. But I'm just pissed because I'm not long. I mean, we're not sitting there taking it in the gut trying to short this thing right now. And Tom's been right as rain on this one. Not many people have been, actually, but this is what happens when everybody gets on one side of the trade and possibly some of those folks didn't have a trading plan in place. And some of these guys are still shorting into this. Remember, a lot of times, especially back in the late 2000s, I was involved with a day trading situation down in Florida, and we wrote some software for it and did really good with it. But people would come in and some of those guys were just blindly buying everything, but some of them were like, oh my God, this doesn't make sense. Let me look at the numbers, the PE ratios, the blah blah blah. They don't have any business. And then the Yahoos of the world would still go straight up, and Netscape and all that kind of stuff. And did it make sense? No, but a lot of people shorting those things and having to cover was just a feeding frenzy that It would just move the instrument higher based on that alone. So, I said a lot of things there. I think the bottom line is, have a plan when you go into these things, and don't let it get away from you if you're on the wrong side. So, we're going to look at a couple of stocks that have been in the news. We looked at GoPro, my feelings on that, and have been just, what in the world do they have? Buffalo Wild Wings, we're trading 146.76 right now, up a little bit from yesterday's close. Here's the daily. The action yesterday is kind of interesting. If you're trading this, you've got a lid up at 151.42. I think the market in general will ultimately head a little bit higher. That could drag this up a little bit, but you've got some serious headwinds around 150.5, 151.5. We're trading 146.76 right now. Big time targets on this, and a massive lid is going to be around 162, 163. So keep that one in mind. Like the action in the short term, though. Merck, going to hit the drugs really quick here. All right, so 50 right now, and again, had a chance to leverage a little bit this past week off 48.57. I like that. I think this company could actually explore back up into the 54.32. And as a long-term investor, you guys may be like, am I trading this for 3 points? That's a 6 or 7% move, guys. From where we're at right now, and that's not a bad thing. So again, that's going to be the resistance on this particular stock. Yum. Kentucky Fried Chicken is in Yum Brands, right? Is that true? Maybe somebody can tell me that. Nobody cares again. Okay. 71.20, down a little bit. If they are, it's amazing how many Kentucky Fried Chickens are in Asia. It's amazing, literally. I mean, I really don't go into Kentucky Fried Chickens in the U.S., but when I'm in Asia, I seem to stumble into the stores, just like I stumble into the truth sometimes using our information. But 74.61, top of the profile. Thanks, Terry. 74.61, top of the profile. 71.15 pre-market. What does this mean? You've got some support here around 70. Probably going to hit that before we do anything else. If you're trading Yum Brands, you can kind of possibly trade that range between 70 and 74.61. Do I think you've got better plays out there than this? Without question. That's my thoughts on it. Especially like looking at those utilities and XLE stocks. I mean, you can really, really kind of increase the odds. Did I slap my hands? I don't know why I did that. Comcast, CMCSA. Let's look at that one. Up 6%. CMCSA. Boom. All right, so it looks like we got a couple of prints pre-market already. 57. 57. All right, so we're back down to the weekly unfair highs this morning. We had the breakout. That's cool. Again, I'm not personally into trading things before earnings. Comcast, remember we've had a pretty big move down here recently, but you got that 57.06 now, and I want to show you this as support on this. And I actually think after, an announcement like that, we're kind of pre-market pulling back a little bit. You got a chance to really dig in on this. If tomorrow we get a weekly close above this 57 area, my feelings on the broad marketplace is we're going to try to drift higher and kind of hang around that 1920 area and possibly move up. That'll kind of be a rising tides lifts all boats situation. And you've got a turnaround story here. Let me go back to our scanner and let me pull up. I'll pull up Comcast on the break. We got to go to break again. I hear the music. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we have a caller from New York. Maria, are you there with us?
Yes. Hi, John. How are you?
Good. Doing good. How are you?
I'm fine, thank you. I'm sorry I missed the beginning of your show, and that I really appreciate because I'm learning a lot. But
great.
I was wondering, you seem to think that this thing is going to stop tanking, at least the ES, and the market is going to settle a bit. And I was wondering, looking at the price action today, where overnight it was trading at 1920, and then I opened my screen, is at 1895. I don't know what gives you this kind of confidence that that should stop drifting down.
Okay, well, I've been looking at some of our breadth calculations, and I've been noticing the internals. I'm going to go back to our dashboard here really quick. Some of the internals have kind of stayed, for the most part, just kind of bouncing around in the balanced area, especially on the daily. I mean, the weekly is still negative, but we've had some green shoots happen lately. This 1918, 1920 area is a little bit of a resistance. I'm showing it on my screen right now, but I like how, and I'm going to go to our 240s here. I like how, and again, that there's that 1919 on the 240s there. We had 18 and 19 used as resistance, but I like how it's kind of been supportive down here at 1890. Again, I'm looking at the breadth and combination with some of these profiles. And I'm also looking at, like Tom, this is not a great timing tool, Maria, but this dollar coming off, the dollar the market has lately liked a very strong dollar. This dollar comes off. I mean, some things, some people are the market's always kind of forecasting, and a lot of these multinationals may see this now, as a way to start, changing some of their numbers schemes, that the accounting type end of it.
And, no, I agree, and that's why I was thinking. But as you say, I agree. For me, the dollar being weak it should be good, because in fact they're all complaining for the last 2 years that the dollar is too strong and everything. So now suddenly the market is tanking when the dollar is obviously tanking. Doesn't make sense. So I agree fundamentally that it should go up, because the price action is so tough, and and you keep bouncing off. You're thinking, okay, I hope he's not going to break 1860, and then he goes so close. So that's the thing. So I was wondering, with the dollar like that so weak, I think it should go up. But at the same time, and the train was closed at 82, I think, yesterday or something like that. So it should go up, but if the price action is pretty weak.
Oh, well, a lot of times, Maria, and Tom and I and Larry and everybody else in TFNN has been doing this a long time. A lot of times, we had a really good close yesterday, and gapping down like this really kind of should find some buyers. I'm just talking on a very intraday basis right now, and you've got something to lean on here, this 1890 area. If we start kind of crossing below there, you've got to start possibly, at least in the interim, looking at some stops. But again, I mean, backing up, I mean, I don't know what kind of time frame you're looking at trading this on, but we're just kind of bouncing around a relatively wide fair auction on the daily. Again, I like how this thing is kind of hanging around the top of this profile. And again, I know this is disturbing this morning for this to pull back like this. But again, I'm still kind of relatively, put a gun to my head. I'm kind of bullish on the S&Ps right now.
Okay, no, because I was looking also, at 1, 2, 3, like basically it goes up out from the hole there, like it did at the end of January, goes up to the 100-point rally, comes back 50 or 60%, right? So the 0.618. So it's nice. It goes back up to 1940 on Friday, so looks good. It's just the price action yesterday was so awful in a sense, because everything was going bad. And I was thinking, oh my God, this is like going down.
Yeah, it's just like Tom said earlier, it's kind of a trader's time right now. It's not an investor's time, but I like how this thing is consolidating around this 1920.
Thank you, John. I appreciate it.
Thanks very much.
Have a good one. Bye-bye.
Yep,
Bye.
You too. Thank you.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.